Okay, so we're gonna bring up our next speaker. So if you can take your seats, strap yourself in. We're going to get some very, very good information out to you. Our next speaker is from 21st Century Property Direct. He's been involved with the industry a number of years. He has amazing knowledge and experience. Only 1 in 400 in Australia actually is allowed or have been able to own a bank. And this gentleman coming to the stage actually owned a bank. Is that impressive or what? Make some noise. Is that impressive or what? He's owned a bank. He will be talking about advanced finance strategies. He's a great guy. He's an amazing individual. Please put your hands together for Mr. Steven Molnar. Come on, put your hands together for him.
G'day everyone, is that on? Am I on? G'day everyone, how you doing?
Right.
Oh, come on, Melbourne Street. Yeah. We sat next to each other at an event just the other day. Yes, that was me. I wasn't wearing a suit. So whenever I talk about finance, I've got to put the old suit on. But guys, we've got some really great information to share with you on finance. I love finance for one particular reason. Many of you know that I speak about property, but most people think that property is about property. It's not. Property is really about finance. And the more that you can understand how to use finance to help you with any aspect of what you're trying to do, whether it's investment, whether it's business or wealth creation, the more you can harness other people's money on the best terms at the lowest rates, it's going to help propel you to where you want to go the fastest, easiest way. Who actually understands that already and agrees with that? Oh, come on, show me. Who agrees with that? Who's in business? All right, terrific. So, ladies and gentlemen, we've got a very special speaker who works very closely with us looking after all of our members. She's an expert at the coalface on this sort of finance and strategy. So, I'm going to bring her up in a moment. What I'd like to do is bring up Michelle Coleman. And Michelle is not just the owner of W Finance, but she's also an avid investor and a business person. So, she's going to give you 2 insights. And one of the things you'll realise, just like Jamie, is that in business you've got to have not just a plan A but a plan B. And when you have a large sum of capital or cash flow behind you and you've diversified, it takes away a lot of the stress and the risk of being in business. Can I just ask a quick question? Put your hand up if you're in business and you've ever felt in the last month any cash flow issues, any stress around that. Oh, come on. If you don't feel stressed around that, you're not really in business, all right? So having a pool of money and cash flow available to you as a business person is probably the most important thing you could ever have. And what Michelle's going to do is talk to you about some of the specifics of how you actually build yourself into the right person and have a portfolio that makes you very attractive to banks and financiers to lend you the most amount of money, the cheapest, easiest way to make your dreams of building your business into a huge success. So Michelle was just recently on the cover of Your Investment Property magazine with 3 other people because she's built a portfolio independently of her building her business. Now you're going to see her in a second. She looks a little bit different to what she looked like in the photo. So put your hands together and please welcome Michelle to the stage. Doesn't she look radiant? Come on, doesn't she look radiant? So she looks a little bit different to the picture. So we've invited her along because she helps all of our members and all of our clients at the Academy in 21st Century Education just get incredible results. So what I'd like to do is ask Michelle to tell us a bit about her background and her business. So I'll just go to the slide on W Financial.
Okay, so we started W Financial in April this year, but I've been in broking for 12 years. And we specialise in investors. So obviously being an investor, I kind of understand where you guys started from and where you want to go to, and obviously, you know, even still learning now. So we specialise in investors, we unlock your equity, we work out strategies, structures, work out which banks to go with in which order, and just sort of work out how to maximise your capacity in the best possible way. And we've got actually access to wholesale funding. So we've got 5 different lines through different banks that we can actually direct access to with credit assessors and direct questions. So we get good answers, hopefully. And we've got a large referral network. So with the commercial, business, personal loans, we can pretty much any finance, we can make sure you get it in some formal fashion.
Okay.
Yeah.
Actually, let's talk a bit about yourself, please, Michelle.
Well, that's not hard. So basically, I've got a portfolio over 3 million, and I've built that up. We did 12 properties in 2 years, so we've kind of built up pretty quickly. And then I got a bit distracted.
Is that worth a round of applause or what?
Thank you. Thanks.
And in the meantime, you're also building a very successful business.
So then I've concentrated, and a family. This is my third. So in the last 3 years, so we've been pretty busy. It's a woman thing. You've got to multitask. So we've settled over 500 million loans, which is sort of, I think, only 20 people in the country have done that. So I'm pretty much seen every deal, loan scenario that you can possibly think of. Obviously in the magazine. Thank God the picture's gone. Regularly in Ask the Expert magazines, articles, that kind of stuff, and kind of get my face out there a bit.
Okay. Well, tell us about, you've got access to over 30 lenders. So just tell us a little bit about why it's important to come to someone like you rather than going direct to the bank.
Well, mainly when you go to one bank, they'll tell you about their one product. And if you get a no, you think it's the end of the world and you think everyone else is going to say no. We often actually go back to sometimes the same bank you've been to and we actually get a yes. So it's a matter of knowing, we know all the bank's policies, what they will lend, what they won't lend, what the rates are. So if you go to CBA, they will tell you CBA rates. They won't say, oh, Westpac's offering a better rate down the road. So we can do all that for you at the one place.
Michelle, one of the things that I've also noticed is often when a client goes into a bank to actually get money, because money is like oxygen for any business, I'm sure you'd agree with that. Often the bank will give you the best deal that is best for them, even though they may have a whole range of products. So not just going to CBA versus Westpac, but even going to the one bank and having a range of products. So just tell us a bit about what you can do. Even if they're happy with their bank, can you often find better products or better ways of lending from the same bank?
Yeah, because we know what questions to ask. I have a perfect example. My father thought he was getting the best deal in the world from NAB, and he wasn't. So I actually told him what to do, and he actually got an extra 0.3% off the rate by just asking the right question. So sometimes if we can't even help you, refinance or whatever, we'll tell you what questions to go back to your bank to get better rates as well.
I think that's very, very important.
Yeah.
This is one of my favourite sayings. A bank is a place that will lend you money if you can prove that you don't need it. So banks, in my humble opinion of being one of the people who's owned a bank, is what they call fair weather friends. So when the sun is shining, they offer you umbrellas. When it starts pouring with rain, they want to take them back. And this is why I believe it's so important. You've got to put yourself in the position of making hay while the sun shines, setting up all your facilities and positioning yourself that you have access to whatever you need for as long as possible without the banks actually having to call it in. Would you agree with that, Michelle?
Yeah, and exactly what we do, we actually make you look like the bank wants to give you money. So we present the application in the way that they say yes, easily.
And you've got a lot of experience in doing that.
Yeah.
So, Michelle, specifically, what we want to talk about is how do you actually look good to the bank? What's required? Is there a formula? Because most people have not had the experience that you've had in terms of submissions to a bank and knowing what internal credit policy is and how to actually make someone look the best they can.
Yeah, well, with residential, there's an acronym that Conrad uses quite frequently, which is SLICE, so which is security, location, income, character and equity. So the bank will always look at, what type of property you're buying, where you're buying, what kind of income you have, are you making your bills on time, paying your bills on time, credit report clear. So we kind of present you in all that way and we check all those things first to make sure that if there is a late payment on your credit card, that we go to a bank that you don't need the statement. If you've got something on your credit report, we will help you, get it off. There's a whole heap of things that you've got to look at when you're doing your application to the different banks.
And Michelle, would it be fair to say that not only is SLICE applicable to you in your personal life, but is there a SLICE type of situation in your business life as well?
Yeah, very similar. They call it the 5 Cs. So it's a little bit different, but it's very similar. So you've got capacity, which is like the income, collateral, capital, conditions, and character. So the main difference there is collateral. So with residential, you've got the security against the property, which is a lot easier. There's a lot less risk. When you're dealing with business, there's a lot more risks involved and they kind of have a different way that they look at it. Also is the conditions. A lot of the times when it's business lending, they look at the type of business you're in, the market conditions at the time, which is a little bit different to residential. And also just the capacity, depending if it's a startup business or a business already going or a franchise, there's different rules around that as well.
Okay, so would you say it's probably easier to start with residential?
A lot easier. Even when you're getting a business loan, if you've got residential property, it's a lot easier and you get a lot better rates.
Well, let's look at the residential overview.
Yeah.
And if you can talk about each of these from the client's perspective.
So from a residential point of view, if you're borrowing for a home or investment property, you can actually lend up to 97% plus LMI. The rates are, the standard variable rate 6.6, but then you get some discounts which bring it down to roughly 5.9. And then you've got those fixed rates there, which are probably some of the lowest in 20 years. So normally we don't recommend fixed rates, but depending on what you want to do, you can really use it to your advantage. But that's the kind of rates that you're getting at the moment.
And just to dwell on these fixed rates at the moment, imagine if you went to a bank and asked for just overdraft rates for a normal business, they would be much higher than those, agreed?
Much higher, like 10, 12%.
And realistically, if you could lock in something like that to help cash flow your business over a long period of time, that takes a lot of the risk away because you know exactly the amount that you're paying every month for a fixed period of time.
Yeah, and if you do have the borrowing, they always assess you what your current debts are. So if you've got debts at 5.39 versus 10%, it makes a big difference on what you can borrow for your next one.
One of the things that it's coming up in a later slide, it's called splits. But realistically, what most people do is that they co-mingle. So they actually, who's heard the term co-mingling before? Right, if you haven't, write it down, co-mingling, because if you co-mingle, you could actually get into a whole lot of trouble with the tax office. So basically, I'm going to just get Michelle to explain this, but what happens with most people is that they just think, well, I've got a pot of money called my line of credit off my residential loan. I'll just pull some money out to help cash flow my business. Who understands that concept? By the way, is that a very common thing, do you think? That business people will dip into their residential property to help cash flow their business? But if you actually do it and account for the interest the wrong way, you actually could have the Australian Tax Office on your back and they say, well, you can't claim any of your interest as tax deductions. And in fact, then you owe us not just penalty interest, but late fees and a whole lot of other fees as well, which could actually cause you a whole lot of problems. Who understands that so far? So there's a very, very simple way to actually have the bank do all of your accounting for you. And they often in professional choice packages, they won't even charge you for it. Agreed?
Yeah, that's right. Yeah.
So can you just explain the concept of splits and why you would set up a split to make sure that you're actually kosher with the Australian Tax Office?
Yeah, so basically all the banks will let you split the loan. So you have different loan limits for different purposes. So we've actually got a product coming up later which has 99 splits. So I don't know if you want to go that far, but you can actually have 99 splits on your home loan. So you actually have one for your home loan and your personal expenses, and that's one statement, and then you have one for your investment or your business or whatever it may be. So you would just then hand over your statement that's allocated for that purpose to your accountant, and it's really easy to follow.
Yeah, because the banks will usually do a consolidated statement at the end of the tax year, and you just hand the right one to the accountant and just say, well, that's all the interest and fees and charges relating to the business, and that makes their job much easier. And therefore, as accountants, will they charge you more or less?
Less.
I was waiting for everyone else to
be
less.
quiet, so.
Okay, all right. So to me, the split's actually a very, very important thing. So that's residential. What I'd like to now talk about is business lending. So let's just go to business lending and talk about that a little bit.
Yeah, so it really depends on what type of business that you're trying to source funds for and where it's at. So basically, if you're doing a startup business, they do prefer to have some kind of security, residential, commercial. It gives you better rates and the bank's better, risk for them that since you're starting up, you may not be able to do as well as you hope. And you have to provide a lot more information, business plans, cash flow projections. There's a lot of more work involved. Depending on how much you want to borrow and what you're borrowing it for, will depend on what they can give you. So it's a bit broad, but it is fairly depending on the business that you're doing. If you're looking at franchise, a lot of banks will have different franchise approvals. So some will do Baker's Delight, KFC, some will do
Taxi
Telstra.
licenses.
Yeah, so they have different rules for different kind of franchises, and they can actually lend up to 80%, and they vary with rates between 7 and 8%.
Can I just ask you, Michelle, if a bank wants to approve someone and they've just started off in business and they have no security, literally what are their chances just based on their business plan?
Quite slim.
Okay.
Yeah,
virtually zero.
Or very high. high rates. Yeah.
Yeah, very, very high rates. And therefore, the reason the franchises get better LVRs and often, not just the LVR, which is how much they'll lend you as a percentage, but also better rates. They don't put as much premium on there, and they also don't charge as much in fees.
Yeah.
Why is that
Because
on
a
a
lot
franchise?
of time with the franchise, you actually get obviously leads. There's a business history with the franchises. There's a lot more numbers that they can go off to base their projections on.
Yeah, and it's a system that's proven by others.
Yep.
And it's a system that doesn't rely on the individual person.
Correct. Yeah.
Okay. Awesome. Yep. Okay. So let's continue with that. To get the business lending.
Yeah, so if you've got an established business that you want to buy, which is usually more than 2 years, and you've got financial statements that are showing profits, you can actually get a couple of things. You can get an overdraft between 50 to 100 grand unsecured, with the rate obviously higher rates. You can get business loans, which are about 50% of the value of the business, and there's different ways that they actually do that, and that's around the 7 to 8%. Some of the business loans will be determined by the lease that you have with the business. Like if you've got a 10-year lease, they'll have a 10-year business loan, so that can be quite dependent on that. They'll also lend against your stock or the stock of the business, so there's ways of getting more cash that way too.
Okay.
Next. Yep, so debtor finance, that's when they actually lend against what bills are owing or money owing to you. So there are some lenders that will go up to 80% of that to help with your cash flow, which can really help obviously put more cash into your business, and then you can go do other things rather than waiting for people to constantly pay you.
Can I just add to that?
Yeah.
Debtor finance, your invoices are a terrific asset, and there are some companies that are really well known that it's also called factoring, that will factor all their invoices. Has anyone heard of this small company? I'm not sure if you heard of Coca-Cola? Coca-Cola factor all their invoices because it's such consistent cash flow from so many different suppliers that they can go to a bank and they'll see that, or a financier I should say, that is a strong asset that they're willing to lend against. Now, you certainly can't do that as a startup business, but it is something you can aim for later on down the track. So that's often one that most people don't even know about.
Yeah. And then the last one is commercial properties. There's a commercial property involved in the transaction. You can actually lend against that, which can actually go up to 80% loan to value ratio if you're going to occupy the premise yourself and not rent it out. And that's rates from 7.5. And then if it's for investment, it's around about the 6.8, around 75% loan to value ratio. Yep.
One of the things I'll just ask Michelle about this is that you may notice that the LVRs and the percentages for commercial is higher. Now, as a business owner, would you rather be paying more interest or more fees, or less interest and less fees? Which one? Obviously less. And would you rather have access to more money or less money? Obviously more. So this is why, remember I said, often if you're in a position of residential assets, you're actually in a better position. Now, if you only have commercial only, that's pretty much the guidelines. But Michelle, if you also have some residential as well as your commercial, I've seen often banks do this and say, well, the commercial's a smaller part, you've got residential, we can actually bend credit criteria and put it all together and lend you at residential rates. Do you want to just comment on that, please?
Yeah, you can. If you mix the two and you can bring them together and they kind of blend it, sometimes on the commercial property they'll give you residential rates. So that makes it really good. And commercial property can actually just be additional security for residential lending as well. So it can actually help boost up if you're just a bit short, they'll bring in the commercial property as well.
Yeah. Okay. All right. Your important note.
This is really important. So basically, when you look at the terms and conditions of any loan, particularly with the business, you need to look at the terms of the loan, because sometimes if they want annual reviews, that can be quite difficult for a business because you might be starting up or you've had a bad year. If you have to do an annual review, if the bank doesn't like your results for the year, they will recall your loan. So it makes it very hard as a business owner to constantly be, pleasing the bank every year. So you want to make sure that you have no annual reviews if you can. Also, some will actually want P&I or principal and interest repayments over 10 years. So you want to try and get interest only when you can, obviously to help your cash flow. And obviously there's ongoing fees. So some will have a low rate but high fees. So you want to kind of watch all that. And establishment fees can be quite high as well, depending on which lender you go with, which is the same kind of principle when you're dealing with residential lending. You've got to look at everything, not just the rate.
Michelle, I want to ask you a question about this. If you have a good accountant, someone great like Paul that you heard earlier on, who understands that in business, a lot of people, what they do is they minimise the income to their business so they pay less what? Less tax. Who understands that concept? So they live their lives through their businesses. It's a very, very common thing. But the downside of that is what, Michelle?
The banks won't lend you money.
So there are some banks that actually understand how businesses work and do what are called add backs and things like this. So they assess differently. But if you go to an average broker who doesn't understand business lending, what's going to happen, Michelle?
You just won't get the money, basically. So you need to sort of work out with your accountant and your mortgage broker how you get that fine line of what you do with your income. I mean, there are low doc options, both commercial and residential lending, not so much with your business lending, because if you can't prove your income for a business loan, they're not really going to give you a loan.
Yeah, and this is why understanding Slice and the 5 Cs with a broker is so important, because they know how to make you look the best to get the money that you need for your stock or to pay for premises, or even things such as if you actually want to have premises and you've got to put down a deposit, well, maybe you can use a bank guarantee, but use a bank guarantee the right way. And that could cost you much less than actually finding all the cash up front. One of the other things that I've often found is that when business people used to come to me at the bank, they often have sort of bad years. Is it possible in business to ever have a bad year? All right, and when you have a bad year, what does that do to your income? It drops it. And what does that do to your serviceability? Drops it dramatically. And some banks have really awful credit policies where they do what, Michelle?
Well, basically, they won't lend you the money and they'll ask for the money back.
Yeah, they'll call back the loan. Who understands that if you're in business and you've had a bad year and you haven't had the income, and suddenly the bank says, well, we're calling back this loan, here's 30 days notice, who understands that you're in a world of trouble? So, Michelle, what are some ways around that? And I know this is a bit more advanced, but does this happen in business? Do you have bad years? Could things go wrong in business? It's how you react to them. So why is it important to go to a broker who actually understands this and presents it the right way?
Well, basically you want to go to a bank where you don't have that annual review. You want them to sort of give you the money and leave you alone to a point until you want to go back to them for more money. So you kind of want the ones where have no annual reviews. And that's the same with residential. There are some lenders that if you do it in a particular structure, they'll ask for an annual review as well.
Right. Look, one of the other things I just wanted to mention was with the Academy in 21st Century, we actually work with Michelle to come up with some incredible packages for our members to help them with their wealth creation, which is a parallel engine to their business. And I just want to share with you some of the deals that we've managed to get. So, oops, there we go.
So the first one is a low rate home loan combo. So we've actually got funding which is at 5.5%. So it matches like the Ubanks and the low rate home loans which are online. So we've actually got access to some funding around that 5.5 for 60% LVR and 5.6 up to 90%. So what that actually means is that because you're reducing your owner occupied rate, which is non-deductible debt, means you can probably borrow more when you want to borrow for investment or for business or whatever it may be. So you're going to get a good rate in your home loan where you can't claim it, and then we can go get you a great rate still on your investment loan, which is around about the 5.96. The home loan actually has 99 splits, that's the one I mentioned before, and it's global limit. So you can have 2 splits on your home loan, and if, for example, let's say they're 200 each, if you actually need funding from this line of credit but you want to take it from your investment loan, but the money is spare in your home loan, it actually can draw it from the investment loan and adjust the limits for you automatically, which makes it really help with your accounting. It's a $4.95 application fee, $3.95 annual fee, and it's really, it makes a big difference. If you're paying 6%, that could be an extra 0.5 in borrowing capacity to buy another investment property or a personal loan or a business or whatever it may be. But there is a catch. Because we've got it at a low rate, we actually have to get you to do a bit of work, which is to log onto the website, put all your details in, so you need to do a bit of admin work and just fill out the application form. So that's the catch, that's all you really have to do.
Okay. And
this one's a lifeline of credit. So this is a personal loan, so this is not a home loan. So it can be actually up to $15,000 unsecured. So if you need some quick sort of funding for a course or a deposit, it can actually be really quick and easy. You can actually go up to 40 grand if you have a caveat against the property. And sorry for people who live in Queensland, you can't be against Queensland properties. But it's also low doc as well. So especially for business owners who can't prove their finances at the moment or not up to date, it's just an accountant sign off and it's the same rates as a full doc lend. And it can be for any worthwhile purpose, property deposit, course, shares, car, renovation, medical, as long as it's not debt consolidation.
And I just want to add one thing that I'm sure you've heard this before, but 95% of businesses go bust in the first 5 years. And out of the 5%, remaining 95% of those go bust. And often, it's been done with research, it's only for often a small amount of money that would have been required to get them over the hump. And to have something like this available to you that you could actually use when it's required, to have this as a safety line for all the time and money you've invested in your business to let it keep growing. Something like this is absolutely worth considering as to how this would fit into your overall strategy to keep your business running.
And it's revolving, so once you pay a bit down, you can actually redraw. So once you use a little bit of it, you can put some money back in, and it's just there for a rainy day.
Okay, so how do you find out more and how do you get information? Can we just have the forms handed out, please? Lisa, can you just get the forms handed out, please? If you can just get So what we're going to do is hand out some forms to you. Who actually thinks it'd be worthwhile having a bit of more of an understanding of some of the advanced strategies that we've got for business people and investors around their finance and strategies? Who understands that? So what we're going to do is hand out these forms, and if you can just grab a form and pass it along, and then just get it filled out. And Michelle will then be able to set up an appointment time and just talk to you about where you're at and where you'd like to go to, and what sort of funding you need available to you, and how you want to structure it to get the best possible outcome.
Yeah, so with both those deals there's actually an email address. So if you want to basically give me your email and your contact details, I'll get the information sent to you and a link, and we can take it from there. It's really easy. And there's no credit checks at this stage until you give your authorisation.
Okay, what we might do is we might just open it up to a couple of questions from the floor for 2 or 3 questions. One of the points I'd like to make is this, is that having run a bank myself and having business people approach me, one of the things that I've noticed is that often banks will need up to 5 years worth of financials to actually get someone across the line. Now, that means if you're in business, that's not just 5 years, that means in your 6th year of actually having all the details. Now, who understands having a lack of capital, working capital, and lack of cash flow can actually really impact your business growing the fastest, easiest way? No matter how good an idea you have, if you don't have that working capital, it's going to slow you down and allow someone else to jump in on your great idea and take advantage of it. Who understands that? So this is really, and I know finance is probably one of the most boring subjects you can think of.
It's not that boring.
I love finance because I understand the power of finance. So this is why it's so important that you get a hold of this. And one of the things that I also want to stress is this, is that if you understand how to do finance, it can be used as an asset protection mechanism. And this is much more in terms of the advanced finance strategies that we help all of our clients with, but that's something you need to think about as well. So what we'll do is take 2 or 3 questions from the floor. Anyone got any questions for Michelle? Just pop up your hand.
No?
Gentleman up the back, just yell it out.
Michelle, what other alternatives are there?
Oh, hang on, just wait for them. Here we go. There's
Michelle, what other alternatives are there other than solicitors or?
Yeah, there's private funding and investors. You can even, like a lot of the business stuff, we suggest if you're going to buy a business, talk vendor terms with the old owner and just see what you can arrange there. So there's lots of different ways that we can suggest to you, not that we can always give you advice, but private funding, solicitors funding, private investors, there's a kind of a whole off-the-shelf kind of stuff that you need to look at, yeah.
And do you have access to the private investors?
I have people who have access to those people, yes.
Very good.
Yeah.
Okay, any other questions?
Thank you.
Thank you. Any other questions?
I'll be here for a little while afterwards outside if you want to come out and have a quiet chat.
Okay, Michelle's got a table outside. Just make sure you fill out your forms, hand them in to Michelle at the table or any of the staff. So just put your hands together for Michelle. I'll give you just 30 seconds while you fill out those forms, and then I want to just quickly share with you one more thing. Okay. So you're all here because you want to be in business. And business will give you the flexibility to do a whole lot of things. Now, I'm going to have another session on Sunday night. And on Sunday night, I'm going to talk about the #1 strategy that someone like Jamie, who's a very, very successful business person, I've known Jamie for close on 20 years now, very, very successful, but he also understands that you use business for the cash flow. You use business to give you connection with people, you use it for a whole range of different things. But it's not necessarily the best way to build your wealth. Some people, the people who own Facebook and Google, they've certainly built a lot of wealth from it. But who understands that it's really important to have a backup strategy? Because do things go wrong in life? Yes or yes? Of course they do. So what if you could have a business, and I want to challenge your thinking, what if you could have a business that has no employees, no outgoing cash flows, no directors or personal guarantees required, no mortgage debentures across your business assets? And I know some of you don't know what a mortgage debenture is, but this is more advanced finance strategies. If you could have a business like that, who likes the sound of that so far? All right. What about a business that is completely passive? So you have to put no work into it all, and diversifies you to lower your overall risks. And here's the important thing, supports any other businesses you have now or in the future by providing you a platform of cash flow and capital that gives you the ability to either have as your exit strategy being able to franchise, being able to IPO, or being able to go to a big enough size to then make it into a big enough company that will give you the assets and the cash flow you require forever. Who actually would love to have an exit strategy that's based on that? All right? And what about a strategy could start with as little as 40K, whether it's in cash or equity, super, or even a JV. And I'm not talking Amway, by the way. All right? But who would like to find out a business with some of those key fundamentals and how that strategy, that business strategy, could help them in parallel, not as substitute, but in parallel to whatever else you want to do? Because whatever you want to do is fantastic, but would you agree if you put everything into it, and that's what's required in business, there's not a lot of time to do something else? Would you agree with that? Come on, yes or no? Yes. And so this is why we've been able to help so many of our members get incredible results in parallel, whether they're working a job or whether they're running a business, to have another business running in the background for them completely passively for the next 7 to 10 years. Where if you need to, you can cash out in case you need to, or you can let it keep compounding in a tax-free environment until you finally cash out and in some ways pay zero tax. Does that sound like a pretty good business? Yes or yes? Yes. So that's what I'll be covering on Sunday. I'm not going to talk any more about it because my time's up. But ladies and gentlemen, hope you've enjoyed this section on finance. If I can leave you with this one idea, finance is the answer. To whatever you want to do, would you agree that you need finance in your personal life, your business, for your retirement, everything? Your understanding of finance is key to you getting to the end result. So ladies and gentlemen, thank you very much.